evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening, as we're now on Thursday, the 26th of June, 2025, 6:05 p.m. Central Time. The stock market's knocking on heaven's door. Isn't there a song like that? And that's where it's at. I got that in my mind because every TV station, we're on watch. It's going to be the high. I was watching today Liz Clayman on Fox, and she used to wear a hat with numbers from the Dow as it would go to certain numbers. I was cracking up with that. And I used to be a regular on that show. And they're doing the same thing that they always do. But it's every station now. So you got to be at Bloomberg or the others as the markets are just sitting there like this. Look at this market. Would you think after April 7th, here you are just over 2 months later and you're back to all-time highs? And I agree with what they're saying. I mean, the odds of that just coming up and making new highs, which it hasn't done yet in a lot of the markets. NASDAQ has certainly done it, but you're very close. Pretty amazing. It's that simple. It's pretty amazing. That was your washout day. You know that. When you look at the gold, why is it down? Well, why do you want to own gold when this market's running on you? People are moving money out of that. Gold had its move. The war happened. It's over. It's done. It could flare up again, but now it's just remnants of the war. The Khomeini in Iran, the Ayatollah, really, it's not the Khomeini, it's the Ayatollah Khomeini. To make a long story short with it, he's claiming that Iran won. They beat back the infidels, us, and they've beaten up Israel pretty good. I mean, it's amazing what a little bit of smoking can do for you. When we take a look at the dollar getting beaten up, currencies, they've jumped pretty good. I'm looking for the markets on pullbacks to be bought in a number of them. So I still think the dollar is going lower. You know, I've committed now, threw my hat into the ring, that we're going to go for that fifth price count. It's a rare event, but that's where the market next target is. It's got to come out of the downtrend in order for it not to do that, and it hasn't done that so far. On the energies, you're just sort of sitting right here. But the longer they sit, I think the news that comes out is more bearish than bullish. OPEC meets in early July. I think they're going to increase production again for August. We'll see if we're right or wrong. They want back their market share. They see that interest rates are falling across the world. America is the last of the party, but the marketplace is breaking interest rates. We're back to 4.28 right now in the 10-year note. I don't know if it's going to go down to the 4% level or not. You know, one of the greatest traders doesn't think so, and that was Bill Gross of PIMCO. So we'll see. It's hard to know there. Before we get here, maybe we should take a look at the data you're going to get tomorrow, because you got the Fed's one of their favorite tools. You've got the PCE price index, and it's made up of the income and the spending. So you look at that, and there's other numbers that have come out earlier that they'll look at, but they're looking for income up 0.3. They're looking for spending only up 0.1. If you get that, tell me why the Fed has to cut interest rates. You don't have inflation running away. You got the dollar breaking. It generally makes goods in America. In America, if you're importing them, more expensive. But with all the tariffs everybody's got, I don't know how much we're importing of all those goods. And goods at home aren't really running. Housing costs are still too expensive. So we'll get more numbers, but I'm not yet in that camp. I'm certainly not in the July camp of the rate cut. University of Michigan's final June consumer sentiment. They're looking for it unchanged at 60.5. So what you're getting in the market now is the FOMO. Remember to write that down. Fear of missing out. And the traders are buying. If you were to finish the way that you are right now, you'd have a new all-time high close. The last one was 61.6250. You're 30 points over it. In the futures, though, the daily futures, you're not over this high. That is 62.88. You're 90 points away. It can certainly happen, lickety split. Look at how this market from that April 7th has just come completely back. One heck of a move that this market has made, and it's still attracting buyers. In the pattern, you've got a lower and low, higher high. The war threw this all out of kilter. hearing that the market, from the marketplace, that the U.S. on Saturday had hit Iran with the bomb. Doesn't it seem like it was Saturdays ago, plural, not just this past Saturday? To me it does. And took the markets down and brought them right back because it was the 12-second war with the United States. We dropped bombs, we ran, and we're out of it. And right now we want to be friends with Iran. That's basically what's going on from, if you listen to President Trump. The pattern is one of a higher high, lower low. The market came in and did hold the 200-day average. It had great trouble staying under the 18-day average, and then it made its pop to this current high. It's not a new high, and it's running the Bollinger Band. This is what we call the gorilla glue trade. It's when a market gets up and every single day it keeps hitting that number. What it tends to do is take the slow stochastics and makes them embed, where the red and the blue start going sideways over 80, which they're doing. And once they've done that several times in a row, let's take a look. They did it today on the close of business, Thursday. They're setting themselves up for Friday if the market doesn't break big. Well, that means on the breaks, they're generally shallow and they're well bought if it embeds. So that's something you look at. Same thing taking place in the NASDAQ. Here's your high for this contract. We'll see if the market can get up there and take it out. Again, the FOMO, again, 4 days in a row of hitting the Bollinger Band and not moving away from it. In the Dow, you're trying to do a similar thing, not quite the same play. Yesterday's move, I don't think yesterday hit it. Let's take a look and just see. Nope, missed it. And that's the same as missing it by a country mile. So it's not going to be the gorilla glue trade. It could be the same type, but notice it's not even trying to embed. And last to the party, as usual, has been the Russell. Now, at some point, the Russell's going to catch on fire. It's generally when the other markets have gone and everybody looks at themselves and goes, these are the stocks that have been dogs, they're going to come alive. And that's when that happens. Unlike the other indices, this is in an uptrend. You have higher lows, you have higher highs, you're up to the Bollinger Band and you're overbought. But I'm very aware that it's got the best overall chart pattern right now, not best overall price, but that is important. When we look at the DAX, remember we were down here earlier this week? Right at the beginning, I said, I think the pros are coming out. You got oversold, you hit the Bollinger Band, you started right back here, and now you're ready to hit the upper band. So the markets worldwide, it's not just the United States, are saying the worst is over in the Middle East for the moment. Israel will have its problems in Gaza, whatever they are. The President of the United States is telling the Israeli people, you shouldn't go after Netanyahu for his corruption trial. Why are we involved in that? You know, there are things that go on that make no sense to me, but it's a general euphoria in the Middle East that things are better than they were. They're certainly better than they were weeks ago. How much damage did we do? Did we really take out the uranium? Did we knock out the centrifuges? I don't know. You don't know. If you listen to the Ayatollah, he says we didn't do any damage to them. Yeah, they're covered with dust. They'll be fine. They're ready to go again. I will say the South Pars, that huge field of natural gas that Iran shares with Qatar, that has reopened. And that's good news because that takes some of the pressure off those markets, and it gives some money to Iran. Go back, do what you're going to do, keep your regime. Just don't say you're going to blow up Israel and do those other things. Rebuild your country. Higher lows, higher highs. We'll see where the market is there. And you have a bit of an overbought market, but there's nothing bearish on this chart other than, I guess you could say you're overbought, but you can also start the embedding process. Let's take a look. You didn't have both numbers over 80 today. So the first time it can do it could be tomorrow. We don't know how that'll finish. But what did we do in the 5-year? Because as you move in from the 30 and you look at some of these others, you did get the moves. You're 2 days into that. So one more day could do the job there. In the dollar index, I've committed to the bear side. You've heard me say that. You're making new lows. If it goes for a fifth price count, it's in the 89 area, 88, 89. It's unbelievable how far down. That's from here, another heck of a move, but it's not the big one that's happened. We're down about 12% right now. In the euro, the market should have resistance at the upper band, but you have a gorilla glue trade happening right now. So when you get those, the breaks are generally shallow, and what the market tries to do is embed. Embed means these red and blue numbers are going to go sideways over 80, and the market's saying it wants to go higher from that. That's what I think is going on. I think we're in the process of that. You're beginning that process right now. It's begun in the British pound. So what we have is the Swiss franc, the British pound, and the euro leading the move to the upside. The dollar feeling the brunt of that falling. You're not embedding here. You're very overbought, but there's nothing bearish, I mean, other than you're throwing a dart at it and saying, oh, I think it's high. When we come to Bitcoin, I don't know why I still have the June here. That just doesn't make sense. I know I changed it, so I apologize. The last trading day is now, and it seems to just be stuck. That is my fault. Before I even close this chart, I'm going to make sure it's saved and done. Should be the July contract. And I know I saved it after yesterday, so maybe my save didn't work. We have a higher high, lower low in crude. Now, I want to start condensing this chart down, but because of the size of this move and how big it was, I wanted you to see on the chart what it did. It got the market instantly oversold. The bigger question is, are we going to go for these lows? That is going to take work to do. There's nothing bullish on the chart just yet. You can get bounces at any time because you're down $14, $15 from the peak, but that's about all that I'm saying. In the WTI August contract, it's the same thing. As we came down 3 days ago, I said, now you've got to find out what the market wants to do. It's at a combination of the 200, the 100 in green, and the red is the 18-day average of closes on all three, and you're oversold. It's a difficult move that if you can clear that and start coming down, then you have nothing under the market till you're back to 59, and this would all become resistance. It's got to prove it can do that on the next step. The chart adds a lot of bearishness on any move under the 6,400 level. So that would be my number that would get me going, this market's going to have another leg. You're trying that in the gasoline right now. The market came down, and I think on rallies now, will we see the 100-day, the 200 in the gray, and the 18-day average all be resistance in the market? And you know what I told you, I think that the president can't wait to say, and it's only a week away, you know, for the 4th of July, look at your gasoline prices. In natural gas, as I said, that field is now up and running in Iran. You've got the market coming down. There's no threat now to natural gas. They don't need as much from the U.S. as they may have had the war gotten really severe with Iran and the Strait of Hormuz blocked and so on. And that takes the punch to a degree out of these markets. And that's basically where you're at. Are all these setups in the futures easy to trade? They're difficult. That war event kicked markets up and took all the steam out of it. 1, 2, 3 on you this week. That too will be past you now. Like I said, would you think it was just Saturday night that the U.S. dropped those bombs? So you put this together, we try to come up with game plans, and we do it at 6 in the morning, early. The reason is it gives you time to take a look in the futures as what's going on. And the reason I do that early at that hour is because that sets you up for the spiders and ETFs, which open at 8:30 Chicago time. Now, eventually, they're going to have longer hours in the stocks and that are really part of the chart work run by the exchanges. And when they do, I'll just roll into earlier times. It's easier for me, to be honest. But in this is where I'm saying, I want you to buy here. I want you to sell there. It is where you follow the trades as I say them. We put them in a spreadsheet. You follow them. When they're closed out, win or lose, they're closed out, and we're on to the next set of trades. I'm not into managing people's money, so I'm not telling you, you buy here, sell there. I'm telling you what I think off the chart should be bought, where it should be a stop, where you should be taking a profit or a series of profits, taking parts off. And that's how we run it. We run it like you have a portfolio and you work from there. So all this is there along with specifics, take a look at it. Go to iraepstein.com research, join me in there. You'll find it to be very inexpensive, and maybe you get a trade idea that you can hold on to and catch one of these moves. I'm Ira. You have yourself a great day. I will talk to you all in the morning video, I hope, and or you'll see me in the other videos tonight up here. Take care.